This video is good through Sunday, July 11th, 2010. Welcome to this installment of the Weekend Edition. And the markets, wow, have one of the best weeks it's had in almost a year. We have popped up pretty nicely here. And if you remember a week ago when we were doing the video, we were talking about the markets poised to get ready to pop up. So I hope everybody listened very intently to the videos and been watching what we're saying here and took advantage of this massive run to the upside. Now nonetheless, if you are more of a long-term trader, it would have been dangerous to be buying down here. Why? Because you have a downtrend. You're in the confines of a channel of a downtrend. That means you have a lower swing highs, lower swing lows. You draw two trend lines and your channel is going southbound. With that said, it is very detrimental to any trader to be trying to buck the trend. So the trend is your friend. Stay in the right channel. So in a down channel you want to be more bearish than bullish, and in an up channel you want to be more bullish than bearish. However, for shorter term traders, this would have been an awesome opportunity, and I gave you plenty of forewarning here at these lows to be looking for upward movement, and sure enough we have that. But we are at a key moment, gang. The week is ending, or the week has ended as far as the trading week is concerned. Then we come rolling into earnings season, and I'll tell you, everybody is going to be listening to what these earning reports are going to be telling us, because I think that will tell us a lot on how things are faring out. And what we have here on the technical front is this downtrend on the S&P 500 daily. And check this out, we blow this up. We did close just over the 20-day moving average, but we're at a resistance point. This resistance point comes from a trend line going way back here. Resistance, 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 and there we are. We're going to be right here at resistance, and while I'm here, let me give you a read on that. So I see resistance being around, I see as 1080 being a big resistance point, and sure enough 1080 has always been a point of contention here in the markets. So remember 1080, 1080, 1080, that's a big one. I can see us popping up through there, hitting maybe the 1092, the 1093 area, coming right back down, and then starting another down leg down. However, we have gone down one, two, three, maybe three, at least three swings. So the life cycle of this trend is coming to an end. So if we were going to get a trend reversal, this would be the time to probably get one. It wouldn't surprise me to see a nice explosion to the upside out of these resistance points. If we don't do that, gang, expect a downward draw. The question is, where will we stop? If we come down about halfway and then come back up, at that point we'd have a double bottom. You'd have a W, your W formation, W for winner, and that would be a trend reversal heading up. Maybe you pull back just a little bit and then shoot up. At that point you'd have a higher swing low, giving you the trend reversal pattern set up. So if we do pop up and then pull back, maybe get a support here and then rally, you'd have an inverted head and shoulders trend reversal. So as far as I'm concerned, we're still in a downtrend. There's a better chance of us dropping here than blasting through. But if it does blast through, we would be in the makings of a trend reversal. So keep your eye on that. The other thing that I'm seeing here is we continue with the bullish divergence on the MACD. So, and that is my BlackBerry curve going off and my wife calling, and I'm going to put her on hold to finish this video. And anyway, we go over here to the weekly. And the weekly here, it kind of has the formation of a bull flag, which is pretty bullish. However, we got a problem here. The problem is the head and shoulder reversal pattern. Shoulder, head, and shoulder. And gang, the neckline is right here, this swing low to this swing low, and we had crashed through it, but we immediately have come back to kind of heal itself. So blowing this up here, you have this lower low, but you have an equal low. That, my friend, is a bullish divergence, and in that case you could see a pop take place. We still have the 50-week moving average acting as resistance. You still have this trend line acting as resistance. 1100 on the S&P weekly is a massive area of resistance. So for us to go bullish, we're going to have to blast through a lot of resistance, including the 50-week moving average and the 20-week moving average and this big hefty trend line coming down. Will that happen? Maybe, maybe not. It has a lot of work ahead of it if it's going to. Now here's the monthly that trumps them all. Big run and a bull pullback. The bull pullback gives me a retracement of about 38% here. That's pretty bullish. By anybody's measure, and what we have here is kind of a bullish Harami reversal pattern. We did close below the 200-month moving average. First time we've done that in quite a long time, back here in 08. And we crashed after that. We closed here last month, but this month we're starting to show some strength. Now, don't be fooled by this, because this month we're just getting started, and this could just be marking the high. If we were to crash back down and come below this 1050 area, mark my words, if we get back below 1050 and we close there, we're in a lot of trouble to the downside, because that could be an extension of this down leg, and the question is how far will we drop? Anybody's guess. At this point we have a lower high and a lower low, so I don't care how green this looks, bears are still in control. We just have some intra-bar bullish behavior taking place now. All right, so as far as the monthly is concerned, we have a really good chance of seeing some upward motion as if we can end out the month as bullish as what we're seeing now. However, the weekly has a big problem. The weekly has that inverted head and shoulders, you know, and it looks like it's running into some problems here. And we need to rally hard past that 1100 really to mean anything. Now, here is the NASDAQ. NASDAQ's really important. We come down, boom, support, boom. We come rallying northbound. I need to get another trend line in here, so let me get this drawn. I'm going to go from swing to swing. So we have this area, boom, coming up. We have the 20-day moving average here that will act as resistance right around 22.11. And then upwards, I see 22.25, 22.26 being a major resistance point. Gang, watch that one. Boom, it will hit, and it has a really good chance of dropping at that point. And look at this, we're still sub-zero on the MACD. No good, but a big bullish divergence. So keep an eye on that one. I mean, game, we are poised to make a major move. Either we're going to go really bullish, or we're gonna have a big leg coming down. I think that we are positioned to have a pretty serious week next week. So let's watch that. And here is the weekly. Weekly, look at this. It's a confirmed head and shoulders, shoulder, head and shoulder, neckline coming across the big red line. We broke down below it. We're still below it. We're below the 50-week moving average. We're below the 200-week moving average. We're below this trend line. We are in a lot of trouble. For the week, we did end in what's called a bullish Harami, so it gives us a nice bullish sentiment, reversal opportunity coming northbound, but there's a lot to chew through to make that happen. And then let's bring in the monthly. There it is in all of its glory. Big run down, bam, big run up, bull pull back to about 38% here. And for the month, it's not nearly over, it's just beginning. But the question is, are we making just our highs for a big red candlestick? Maybe, maybe not. This is a crucial time where we're in, folks. Very, very crucial. This earnings season will tell the tale. If people are freaking out, because I'll tell you, man, there's some fairly new shopping complexes around my area, and I'm already seeing people closing their doors in this. It is really rough out there. I just read this article, a brilliant article on 10 reasons why we're going into a major recession. And he says they're talking about how what we're seeing now in the economy is much like what we saw in 2007, 2008. It looked like this. Now, get a picture of this, okay? We get this big run up, this little pullback at these major highs, right? Look where we're at right now. Big run up, little pullback. And look what happened after that one. Just crashed and burned. Are we due for that? You have to be ready for it. So, there you have it. We look forward to you guys joining us at the Teach Me Market Internals seminar or webinar. It's coming up very soon. Early bird specials for all of you that get in early. Take care. Safe trading.